eventually the currency markets will matter again for crude oil, commodities, and even the stock market. So that's what we're going to focus on today. We are DeCarly Trading. We're a futures and options brokerage service located in Las Vegas, Nevada. If you're interested in trading futures and options, we'd love to hear from you. Before we get started, I want to remind everybody that there's a substantial risk of loss in trading futures and options. Trading is not suitable for everyone. I'd actually venture a little further and say that maybe trading isn't for most people. Whether we like it or not, currency valuations are a primary driver of both stock and commodity prices. We like to talk about supply gluts, demand destruction, the Chinese trade deal, growing cycles, all of these sorts of things that do impact commodity pricing. But the reality is, of change in the currency markets, for example, stronger dollar, weaker dollar, stronger euro, vice versa, those things can render all of the other things that we like to talk about and write about almost inconsequential. We've seen it occur time and time again throughout the years, but it's a fact that most people just simply forget, especially in today's environment when we're looking at volatility near historical lows in the currency markets. This is a chart that we borrowed from More Research Center Incorporated that shows the implied volatility, which is the volatility the option market is pricing in for the euro futures contract, is near an all-time low. Now, currency markets are known for being resilient and for putting together long, prolonged trends, but in recent years we've actually seen the exact opposite. In fact, aside from some Brexit volatility here and there in the British pound, many of the major currencies have been trading mostly sideways for months, and in some cases even years. The US dollar itself has been hovering sideways relatively high in the high 90s since 2015. We can see in this volatility chart of the euro that volatility doesn't last forever, and that's the case in any market, whether we're talking about euro or crude oil or the grains. We can go through long periods of low volatility, but it's inevitable eventually that will change. And when it changes, it happens quickly. It catches traders off guard. You don't want to be on the wrong side of that. Looking at the US dollar index, this is a weekly chart. We can see that the index itself, by the way, the dollar index is traded on the ICE exchange. It's basically the US dollar paired against a basket of global currencies, major pairs. Most of that basket is made up of the euro, just to give you an idea. But we can see that we've been trading near 100 in the high 90s, which is actually historically a pretty lofty level overall. The dollar index usually doesn't stay up in these areas. This time around it has for quite some time, and to be honest, we weren't expecting it to stay this high this long, but central banks and interest rate manipulation and those types of things have changed the markets obviously a little bit. So again, we know that periods of low volatility are followed by periods of high volatility. Our best guess is if volatility does come back to the currency markets, it's going to result in a lower US dollar. You can see on this chart, we're probably due for a trip down to the trend line and maybe even a break below in our estimation. Trend line support would be around the 90 area. We wouldn't be shocked to see a move into the mid-80s, to be honest, if volatility does come back. Similarly, if the dollar sells off, that should push the euro higher, and these two factors have an impact on commodity trading and stock trading. In fact, generally the commodity markets tend to move higher as the dollar moves lower, or in other words, it's correlated with the euro. So if the euro starts moving higher from here, probably going to drag commodities up with it. Here's a chart of the WTI crude oil traded on the NYMEX division of the CME group. We can see that we've been trading relatively sideways. Crude has basically been trading between 60 and 50, so it's no shocker that while we're seeing low volatility in the currency markets, in fact, all-time low volatility in the currency markets, we're seeing similarly low volatility in crude oil. I've talked to a few traders recently that seem to think that they've kind of been conditioned to believe that the move between $60 and $50 per barrel, which is a $10 move, is some sort of volatile event. But Obviously, it's not. If we take a step back and look at the weekly chart, a $10 move in crude oil is actually just ebb and flow noise. It's really meaningless. We can see crude oil in more interesting times can move $30, $40. I've seen crude move over $100 a barrel in a handful of months. So don't be lulled by the low volatility. It's not going to stay. It can last for a long time, but it's not going to last forever. Our best guess is when volatility in the currency markets comes back, so will volatility in oil and some of the other commodities. Specifically in oil, we think that the eventual breakout will be on the upside. Whether or not that's going to be in the near term, it's hard to say. You can see we're pressing up against resistance around the 61.50, 62 area. I wouldn't be shocked to see it retest the bottom end of the range in the low 50s, but ultimately our view is eventually the breakout will be to the upside. And then again, fundamentals in crude oil almost don't matter. If the dollar goes down, crude could see the 70s again. It's really that simple. If you're interested in learning more about commodities or learning more about the relationship between the dollar and commodities, we actually have a lot of videos on our website. If you go to DeCarleyTrading.com, go to Learn at the top, and then look for trading videos, and we have about 40 videos that talk about all of these sorts of things. So if you're interested, check it out. Obviously, if you're interested in trading, we'd love to have you as a client. And if you want to learn a little more about what we're talking about today, I also wrote a book about all of these things, and it's included in Higher Probability Commodity Trading. You can find it on Amazon or any major book outlet. And again, we're DeCarley Trading. We'd love to hear from you. If there's anything we can do, let us know.